Purpose of business documents. What are business documents? Business documents are used to keep records of all transactions. They are used as sources of information. The amounts are then entered into the books of prime entry. They can be used to check potential errors. What business documents do I need to know? Invoices, debit notes, credit notes, statements of account, checks, check counterfoils, receipts, paying in slips, bank statements, petty cash vouchers, trade discount. What is a trade discount? A trade discount is a reduction in the selling price of goods or services. Trade discount might be offered if the customer buys in bulk. If the customer is a loyal and regular customer. Trade discount is applied before a transaction takes place. The discounted amount is the value that is entered into the books of prime entry. The value of the trade discount is not entered into the books of prime entry. Trade discount is not part of the double entry system. Cash discount. What is a cash discount? A cash discount is offered to credit customers for early repayment of an invoice. The supplier will state the deadline for payment in order to claim the cash discount. The amount before the cash discount is entered into the books of prime entry. When the customer pays early and claims the cash discount, the amount of cash discount is recorded in the books of prime entry. Invoices. What is an invoice? An invoice is used as a record of a credit sale or credit purchase. The supplier issues an invoice to the credit customer. The customer might refer to this as a purchases invoice. The supplier will keep a copy. They might refer to it as a sales invoice. An entry is made in the books of prime entry when an invoice is issued or received for goods or services. The customer enters the value in the purchases journal. The supplier enters the value in the sales journal. If the invoice is for a non-current asset, then the book of original entry is the journal. What information is contained in an invoice? The date of the transaction. The details of the supplier. Name and address. The details of the customer. Name and address. The details of the goods or services. The quantity. The price of each item. Trade discount. This is deducted before the total amount is stated. The total amount owed. Terms for eligibility of cash discount. Date payment is required by. It might also state any interest or charges that will be applied after this date. Example of an invoice. Exam tip. You might be required to complete an invoice. This will usually involve the calculation of percentages of an amount. Worked example. Complete the invoice below. From T. Payable, 123 Supplier Street, Newcastle, NE12 BC. Bill to T. Receivable, 321 Customer Close, London, EC12XY. Invoice. Invoice number, 3,141,576. Invoice date, the 21st of March 24. QTY. Description. Unit price. Dollar. Amount. $50. Accounting flashcards. 4. Ellipsis. Mark schemes. 20. Ellipsis. Subtotal. 500. 5% trade discount. Ellipsis. Total. Ellipsis. Answer. Amount for accounting flashcards. $54 equals $200. Amount for mark schemes. $500 minus $200 equals $300. Quantity for mark schemes. $300 divided by $20 equals 15. Discount. 5% $500 equals $25. Total. $500 minus $25 equals $475. From T. Payable, 123 Supplier Street, Newcastle, NE12 BC. Bill to T. Receivable, 321 Customer Close, London, EC12XY. Invoice. Invoice number, 314,156. Invoice date, the 14th of March 24. QTY. Description. Unit price. Dollar. Amount. $50. Accounting flashcards. 4. 200. 15. Mark schemes. 20. 300. Subtotal. 500. 5% trade discount. 25. Total. 475. Debit notes and credit notes. What is a debit note? A credit customer issues a debit note to a supplier to request a reduction in the balance of an invoice. The customer could ask for a reduction if the goods are damaged or faulty. They were sent the wrong items. Goods are missing from their order. No entries are recorded in the books of prime entry at this stage. This is because the supplier has not yet authorized the reduction. This is done when the customer receives a credit note from the supplier. What information is contained in a debit note? The date of the request. The details of the supplier. Name and address. The details of the customer. Name and address. The reason for the request for a reduction. Details of the goods that are being returned. Details of the goods that were missing. The total reduction that is being requested. What is a credit note? A supplier issues a credit note to a credit customer when the balance on an invoice is reduced. The customer uses the credit note received to record the return. It will be matched and filed with the corresponding invoice and debit note. The supplier keeps a copy of the credit note issued to record the return. It will be matched and filed with the corresponding invoice. An entry is made in the books of prime entry when a credit note is issued or received. The customer enters the value in the purchases returns journal. The supplier enters the value in the sales returns journal. What information is contained in a credit note? The date of the reduction. The details of the supplier. Name and address. The details of the customer. Name and address. The reason for the reduction. Details of the goods that are being returned. Details of the goods that were missing. The total reduction that is being given. Worked example. Samir sells pet food. Hashim is a credit customer. 3 events take place during a week between Samir and Hashim. Complete the table to identify the business document that is issued and the name of the person who issues the document. Event. Business document. Person who issues the document. Hashim buys pet food from Samir on credit. Hashim tells Samir that he wants to return some pet food. Samir receives the returned goods and reduces the balance on Hashim's account. Answer. Event. Business document. Person who issues the document. Hashim buys pet food from Samir on credit. Invoice. Samir. Hashim tells Samir that he wants to return some pet food. Debit note. Hashim. Samir receives the returned goods and reduces the balance on Hashim's account. Credit note. Samir. Statements of account. What is a statement of account? A statement of account is used to show all transactions between a credit customer and a supplier within a given time frame. A statement of account is issued on a regular basis by the supplier. No entries are recorded in the books of prime entry when a statement of account is issued or received. This is because no new transactions have taken place. The customer can check the balance on the statement with the balance in their purchases ledger account. There is usually a balance column which shows the balance after each transaction. The statement of account is written from the point of view of the supplier. Transactions which increase the customer's balance will be labeled as a debit. Transactions which decrease the customer's balance will be labeled as a credit. What information is contained in a statement of account? The date that the statement is issued. The details of the supplier. Name and address. The details of the customer. Name and address. The opening balance. The date and amount of any purchases by the customer. These will correspond to invoices that were issued. The date and amount of any returns by the customer. These will correspond to credit notes that were issued. Payments made by the customer. Cash discounts received by the customer. The closing balance. Worked example. An incomplete statement of account is shown below for the month of April 2024. From T Payable, 123 Supplier Street, Newcastle, NE12 BC. 2. T Receivable, 321 Customer Close, London, EC12XY. Statement of account. Statement number, 123,456. Statement date, the 30th of April 24. Date, reference, debit, dollar, credit, dollar, balance, dollar, 2024, April 1st, opening, balance, 450, April 15th, payment, 200, 250, April 15th, discount, 20, 230, April 23rd, goods purchased, 300, ellipsis, April 28th, goods returned, 180, ellipsis. Complete the table below to show the business document that T Receivable would use as a record of each transaction and calculate the balance immediately after the transaction took place. Transaction, business document, balance, April 23rd goods purchased, April 28th goods returned. Answer, transaction, business document, balance, April 23rd goods purchased. Sales invoice, 230 plus 300, 530, April 28th goods returned. Credit note issued, 530 to 180, 350. Receipts. What is a receipt? A receipt is used as a record of a cash payment. A supplier issues a receipt to a customer when they pay for goods using physical cash. Sometimes a receipt is issued when the customer pays using money in their bank account. Other business documents may also be used to record these transactions. Example of a cash receipt. Checks and check counterfoils. What is a check? A check is a form of payment. It is written by the customer and given to the supplier. The supplier takes the checks they receive to the bank and deposits them into the business bank account. A check will contain the details of the customer's bank account, the name of the supplier, the amount to be paid, the date on which the check is written, the customer's signature. The supplier will use the check as the business document for payments. When the customer pays by check. What is a check counterfoil? Checks are attached to counterfoils in a checkbook. When a customer writes a check, they also fill in some basic details on the counterfoil. The name of the person who is being paid, the amount to be paid, the date that the check is written. The customer tears off the check and hands it to a supplier as payment. The customer keeps the check counterfoil. This is used as a record of the payment. Example of a check with a counterfoil. Petty cash vouchers. What is a petty cash voucher? A petty cash voucher is a document used when paying for small valued purchases using petty cash. This is usually done when a check would not be appropriate due to the low value. The customer pays the supplier using money from the petty cash till and records the details on a voucher. The information from the vouchers is then transferred to the petty cash book. Paying in slips. What is a paying in slip? A paying in slip is a document used when depositing cash and/or checks into a bank account. The paying in slip is kept by the business as a record of the deposit. It contains the total amount from cash, the total amount from checks, the total amount being deposited, the date. Example of a paying in slip. Bank statements. What is a bank statement? A bank statement is issued regularly by a bank. It details all the bank transactions within a given period. It shows money that goes in and out of the business bank account. It shows the opening and closing balances for that period. A bank statement is used as a business document to identify and reconcile payments by credit transfer, payments by telephone transfer, payments by direct debit, payments by standing order, bank charges and interest. What is a direct debit? A direct debit is used by a business to make recurring bank transfer payments to a person or another business. The direct debit is set up by the person or business receiving the payments. The business that makes the payment needs to agree to the terms. The payments can change. The dates of the payments. The amounts of the payments. What is a standing order? A standing order is used by a business to make recurring bank transfer payments to a person or another business. The standing order is set up by the business making the payments. The payments are fixed. The dates are determined in advance. It could be the same day each month. The amounts are the same for each payment. Example of bank statement. A summary of business documents for transactions. Transaction. Business document for the customer. Business document for the supplier. The customer buys goods on credit from the supplier. Purchases invoice. Sales invoice. The customer returns goods to the supplier. Credit note received. Credit note issued. The customer pays a supplier using cash. Receipt. Receipt. The customer pays a supplier using petty cash. Petty cash voucher. Receipt. The customer pays a supplier using a check. Check counterfoil. Check. The customer pays the supplier by credit transfer, telephone transfer, direct debit or standing order. Bank statement. Bank statement. The supplier deposits the cash and checks into their bank. None. Paying in slip. Purpose of books of prime entry. What are books of prime entry? Books of prime entry are used to record the details of a transaction. Older terminology for these books includes subsidiary books, books of original entry, day books. Information is taken from the business documents and entered into the books of prime entry. The details are then transferred from the books of prime entry to the ledger accounts. The 7 books of prime entry are sales journal, purchases journal, sales returns journal, purchases returns journal, cash book, petty cash book, general journal. The accounting process. What are the advantages of using books of prime entry? Books of prime entry are another stage which can be used to check for errors. They can help in the preparation of control accounts to check the accuracy of the ledger accounts. Each book of prime entry collects the same type of transaction. The books allow managers to see the totals for different types of transactions easily. Therefore, there are fewer entries in some of the ledger accounts. Bigger businesses may have multiple bookkeepers. Different bookkeepers can be responsible for different books of prime entry without any risk of work being duplicated or missed. Sales journal. What is the sales journal? The sales journal is a record of all credit sales. Cash sales are not recorded in the sales journal. They are recorded directly into the cash book. It contains the dates of sales, the names of the credit customers, the amounts for each of the sales. The amounts should be after trade discounts have been applied to the list prices. The bookkeeper uses the sales invoices to enter the information into the sales journal. The totals are transferred to the ledger accounts at regular intervals. Credit the sales account with the total. Call this entry Sales Journal. Debit the individual trade receivables accounts. Exam tip: if a sales journal is used, only one entry is made to the sales account at the end of a given period rather than separate entries for each individual sale. If a question does not mention a sales journal, enter the individual transactions into the sales account and label them with the names of the trade receivables. Sales Returns Journal. What is the Sales Returns Journal? The Sales Returns Journal is a record of all the returns from credit customers. It contains the dates of the returns, the names of the credit customers, the amounts for each of the returns. The bookkeeper uses the credit notes that were issued to enter the information into the Sales Returns Journal. The totals are transferred to the ledger accounts at regular intervals. Debit the sales returns account with the total. Call this entry Sales Returns Journal. Credit the individual trade receivables accounts. Exam tip: if a sales returns journal is used, only one entry is made to the sales returns account at the end of a given period rather than separate entries for each individual return. Purchases Journal. What is the Purchases Journal? The Purchases Journal is a record of all credit purchases. Cash purchases are not recorded in the Purchases Journal. They are recorded directly into the cash book. Purchases of non-current assets are not recorded in the Purchases Journal. They are recorded directly into the cash book. It contains the dates of the purchases, the names of the credit suppliers, the amounts for each of the purchases. The bookkeeper uses the purchases invoices to enter the information into the Purchases Journal. The totals are transferred to the ledger accounts at regular intervals. Debit the purchases account with the total. Call this entry Purchases Journal. Credit the individual trade payables accounts. Exam tip: if a purchases journal is used, only one entry is made to the purchases account at the end of a given period rather than separate entries for each individual purchase. If a question does not mention a purchases journal, enter the individual transactions into the purchases account and label them with the names of the trade payables. Purchases Returns Journal. What is the Purchases Returns Journal? The Purchases Returns Journal is a record of all the returns to credit suppliers. It contains the dates of the returns, the names of the credit suppliers, the amounts for each of the returns. The bookkeeper uses the credit notes that were received to enter the information into the Purchases Returns Journal. The totals are transferred to the ledger accounts at regular intervals. Credit the Purchases Returns account with the total. Call this entry Purchases Returns Journal. Debit the individual trade payables accounts. Exam tip: if a Purchases Returns Journal is used, only one entry is made to the Purchases Returns account at the end of a given period rather than separate entries for each individual return. Worked example: Jeff is a sole trader. In February 2024, the following transactions took place. February 1st, bought goods on credit from Samson, $500. 3. Bought goods on credit from Helena with a 10% trade discount, list price $300. 6. Returned goods to Samson, $50. 7. Paid $250 to Samson by credit transfer. 10. Bought goods using cash from Jimmy, $70. 15. Bought goods on credit from Samson, $400. 18. Sold goods on credit to Jasper, $180. 28. Returned goods to Samson, $100. Prepare the Purchases Journal and the Purchases Returns Journal for February 2024. Total the journals on the 29th of February 2024, and indicate the ledger account to which the total would be posted. Answer: February 1st, Purchases Journal, $500 Samson. 3. Find the discount given by Helena, 10% by $300 equals $30. Find the amount Jeff owes Helena, $300 minus $30 equals $270. Purchases Journal, $270 Helena. 6. Purchases Returns Journal, $50 Samson. 7. Neither journal. It is a payment, not a purchase or return. This would go in the cash book. 10. Neither journal. It is a cash purchase. This would go in the cash book. 15. Purchases Journal, $400 Samson. 18. Neither journal. It is a credit sale. This would go in the sales journal. 28. Purchases Returns Journal, $100 Samson. Purchases Journal. Date. Details. $. February 1st. Samson, 500. February 3rd. Helena, 270. February 15th. Samson, 400. February 29th. Transfer to Purchases account, 1,170. Purchases Returns Journal. Date. Details. $. February 6th. Samson. 50. February 28th. Samson. 100. February 29th. Transfer to Purchases Returns Account. 150.